And welcome. This is Mary Ellen McGonagle with the MEM Edge Show, the show where we put you in front of where the action is in the markets. And we had such an incredible week last week, really historically unprecedented. It was not since '74 we've seen such an advance on the S&P and lots of other underlying action taking place. The markets might be closed, but there's a lot that we can review. I hope everyone is staying safe at home. Let's go ahead and get started with what we're going to be taking a look at today. And first and foremost, as usual, we're going to go ahead and review the current markets. What exactly did last week's advance do as far as looking at the current as well as longer term outlook for the markets? And then also, earnings season is going to begin next week. There's been a lot of other news that has been making its way to the forefront, so it's been a little bit buried, but we are due to start next week. I'm going to share with you some of the better known stocks that have been market movers in other earnings seasons, share with you the outlook and what to be on the lookout for there. And then also growth stocks that are setting up. And I will say, certainly last week was a prime example. A lot of growth stocks have really been sitting out these parabolic rallies. It's been primarily down and out stocks that are seeing the largest in the way of an advance. But that said, there are a select few of growth stocks that are really setting up quite nicely. And I think you'll share that with me as we go over some of those names. And then market sentiment is continuing to improve. We're seeing improved breadth, of course, with last week's action and also other improving dynamics. Before we get into looking closely at the markets, wanted to share, despite the fact that the broader markets are closed today, Friday, the 10th of April, there was some news that you will definitely want to be aware of going into next week. The first is that Mexico did agree they're going to be joining OPEC as well as the oil production cut deal, and that should benefit certainly oil prices. We'll see if that then translates. We have not seen a translation system-wide, if you will, into energy stocks, but certainly a notable news item from today. Also, Intel and Taiwan Semiconductor. These are two heavyweight chip stocks. They did report that they are seeing strong chip demand in the face of the coronavirus and its potential negative impact on the economy. Intel in particular provides chips to data center. Those centers have seen very, very vibrant pickup in demand with the self-quarantine, lockdown, work from home movement. So that is certainly notable as it relates to semiconductor and the growth stocks in that area. Another news item is Tesla did come out today. They are going to be cutting their prices for their Model 3 in China, and that is expected to improve their outlook. Earlier this week, analysts did revise their estimates up for Tesla in the prior to this news, and they're calling for an $800 price target. So we'll take a quick look at that stock. And also lastly, New York, and if I could spell properly, they are cautiously optimistic about the coronavirus cases slowing. So that's certainly good news there. That's been quite the hotbed. So let's go ahead and drill down, take a look at the markets where we are currently. And as usual, I'm going to start with the daily view of the S&P 500 index. It looks quite busy here, but we can easily navigate by sharing with you that I have these simple moving average as overlays. That green line is your 10-day simple moving average. I'm going to go ahead and share so that arrow lines up, and we can take a look at the 21-day simple moving averages. Both of these are, of course, shorter term, but they can be very effective as far as giving insight into where we are with the broader markets. And then the red is the 50-day simple moving average. But there are, let's go ahead and drill down and take a look at the action here among these daily price bar charts as they relate to the markets. As we go back to prior upward trending bull market periods, we want the index to be above these shorter term simple moving averages. So that was the first area that we were on the prowl for as far as identifying a potential bear market reversal. And we did get that. March 23rd marked the low in the markets. And since then, we have seen an advance above that shorter green 10-day simple moving average. And then more recently, a move and a nice break up above this blue 21-day simple moving average. We did also have what's called a golden cross that developed on Monday of this week and has since evolved. That's when your shorter term simple moving average breaks up above the next longer term moving average, and it is a bullish signal. And this 50-day simple moving average is going to be your next area of possible resistance. The markets are currently at 27.89. That 50-day moving average stands at 29.09. So we are going to be watching very closely to see how the markets navigate as they get up closer to this 50-day simple moving average, very clearly in a downtrend. So that's going to be our next critical area of defense. See if we can break up above that. One other area, an item that I did want to mention to you is for many of you familiar with my work, you know that I was with William O'Neill and Company for 15 years in their institutional sales department. And it was during that period that I worked with top portfolio managers and analysts throughout the globe. And more importantly, I really became initiated and tuned into a very sound way of identifying potential bear market reversals, and it is called a follow through day. Those of you not familiar, I urge you, you can certainly go to Investors Business Daily, their website, and look up, but I can share with you some of the dynamics that would need to be in place for a follow-through day to occur. It did occur with the S&P on April 2nd. It was rather myopic. The volume wasn't really quite there, but then we did get a follow-through day on April 6th with the NASDAQ. And in essence, you are looking at the market action once it hits a new low, and any period from the fourth day out, you are looking for a day in the markets where they advance on above average volume. And we did, again, we got that on April 2nd with the S&P 500, and then more recently the NASDAQ on April 6th. So that is certainly bullish. There are other components that from the O'Neill methodology that we would need to see to get really excited about this market. And one of those is to have leadership names breaking out of sound bases, and we are not seeing much of that at all. That is a very rare occurrence. A lot of this activity, certainly last week, is just an awful lot of bottom fishing, a lot of super down and out stocks that were off well over 50% that are bouncing. So that is a critical component that would hinder certainly my getting overly bullish, but there is a lot to look at, certainly, and certain ways that we can prepare for and true advance out of this bear market. So let's go ahead and get started. I did want to share with you another view of the S&P 500. This, of course, is that daily view. And actually, before we leave that, I did not point out the fact that the RSI just this week did turn positive. It broke back up above this 50, so that's very constructive. And the stochastics, they were an early signal. As you may recall from last week, we did get that nice positive breakup above 50, and stochastics will do that. It is another momentum indicator, but it can often be a nice early indicator of potential upside or downside. And we can see that we're now up here on the daily, up here into what's called overbought. And that's not the end of the world, but we can see at some point there would be an anticipation of some sort of pullback, which certainly would not be out of line given the 12% advance that we saw on the S&P last week. So let's go ahead. I want to look also at a weekly chart. The longer term these charts are, the longer your outlook and prognosis that you can draw from that chart. So we're looking at the S&P 500 out of a weekly chart. This is that 12% advance last week. A couple of items, and I've talked about this in prior shows, the fact that the RSI on the weekly did get down into oversold, and I'm pointing that out because it's very highly unusual. Going back historically well over 20 plus years, there are only two occurrences on a weekly chart that the S&P 500 got down into oversold. And one is that 08-09 bear market, and then the other is the 01 bear market. So the reason I'm pointing that out is an advance out of an oversold position on a weekly S&P 500 can really point to a nice prolonged uptrend. It can be really quite powerful push to come out of that oversold into bullish territory. So on the weekly, we can see the RSI is not quite positive. Take a look at the stochastics down here. They are just coming out of an oversold position and potentially trending upward. And I've also pointed out other periods when on the weekly chart, it is going to be a later signal as far as getting you into the market, but more on the bigger picture side, we can see coming out of this 2018, that December bear market, the advance out, how it really did uh, go on for quite some time, and then other various periods, the correction in 2016 and the advance out of that, when you can marry this weekly, but again, coming out of this oversold can be really quite powerful. Let's go ahead and take a look. As usual, we're going to drill down a bit more here and take a look underlying and those sectors underneath the broader markets. This is the S&P 500. It's called Candle Glance View. You can access this on that interface page initially on StockCharts.com, and it allows you to look at the 11 underlying sectors within the S&P 500. And what I've done is added this RSI, that relative strength indicator, sorted it in descending order. We can update that. And really what I want to be able to identify is where is the strength currently in the markets. And we can see that up here in the forefront, XLB, that's the materials grouping, it was up 18% last week. Now, my show last Friday, I talked about gold stocks. They came through. They rallied about 18% as well. But we are seeing a lot of bottom fishing here. Aluminum, steel, really beaten down areas that are moving to the forefront. Real estate. These are going to be those REIT stocks up 20% on the week. Biggest movers there are the mortgage REITs. They got beaten down. Some of them were down up to 80% on the prospects of potential mortgage defaults given high unemployment and slowdown in the economy. So we did see a bounce there, certainly in a number of these other REITs as well that had gotten beaten down. This is of more interest to me. Healthcare up here in the forefront. As we review other areas, I'm going to share with you specific areas within healthcare and a couple of factors at play here. Of course, we have a number of pharmaceutical biotechnology firms that are really in the forefront as far as developing drugs to combat, test, and otherwise help with the coronavirus that is spreading, continuing to spread. So healthcare up here in the forefront, we are seeing the emergency FDA approvals that are taking place. So a lot of vibrancy here that is quite constructive. Healthcare, of course, is defensive as well. So we have that defensive coupled with select areas of growth in healthcare. So that we're going to share some stocks in that sector. Utility stocks, another area that bounced from a really oversold position. Utility stocks were up 13% last week, but we can see they're not breaking up above this 50-day simple moving average. And then we can, of course, drill down and take a look. Unfortunately, technology is lagging a bit. this week, XLK was up 8.8% relative to the S&P, which was up 12%. So that was that lag that I talked about in growth stocks. They're languishing a bit while these other beaten down areas saw quite a bit in the way of buying. XLI, this deterioration here, all about those airlines and other areas that are seeing deterioration. So that's your view of those sectors. One other area before we move on that I do want to share with you, and that is some of the underlying industry groups that are also going to provide us with a lot of intel as far as where the markets are. So this is another candle glance view. What I've done is populated it with the NASDAQ, the Dow, and then also small cap stocks. They were up tremendously last week. And then we can see IBB, that's that biotech ETF, oil, gold, and volatility. We're going to want to take a look at that, as well as semiconductor and software stocks. So again, RSI, strength to weakness. So we can see gold stocks up here in the forefront, and there are some very interesting dynamics that are taking place in that gold market relative to the US dollar and inflationary versus deflationary characteristics that are beginning to emerge. So a lot of specialists in gold are quite bullish on the continued uptrend in some of these gold stocks. So hopefully we can have time to get into that. But this, again, is going to be of true interest to me. This pickup here in biotechs, they were only up about 7.5% on the week, but this break above this 50-day simple moving average is really, it's not the prettiest of charts, but this is quite compelling. This gap up, this remaining position above this 50-day, which is this red line on the daily chart, because what will happen eventually as this index and other stocks as well, you're going to want to pay attention to this as they break above this 50-day simple moving average and retain a presence above that. And I'm taking us back to last fall when biotechs first came into favor. We can see that this 50-day was in a downtrend, but as the index had a presence and continued to advance, eventually it pulls up that 50-day simple moving average, as well as these shorter terms. And that is what you want to see. You want these moving averages in an uptrend, the index or stock finding support as that uptrends. So quite bullish action in IBB, and that's all about that healthcare area. But we are also seeing a lot of cancer-related and other drugs that are being either FDA approved or being moved through their clinical trial phases. So there's more to it than just coronavirus. Over here we have IGV. Now that is the one of many, but I find it to be very useful, software index. And it did have a nice 11% advance last week, but let's just take a quick look at the chart because it is in line with the broader markets attempting that V-shaped type recovery, finding resistance at this blue 200-day simple moving average. Now, interestingly, we are getting positive on that RSI. We did get a positive signal on this MACD, but you'll see this with a number of the underlying stocks within the group that they're all at critical junctures as far as potentially finding resistance if they can break back up above. Of course, that would be quite constructive. Let's take a quick look at the volatility index. We did, of course, spike to historical highs back here, 85. This is coinciding with the bottom in the markets back here. Certainly just before the market's bottom, we did peak. So it is good to see the VIX dropping. We're down at 41, still at relatively historical high levels. For a very lengthy time, we were down in the mid-teen area, but to see volatility dropping is certainly encouraging and something that we do would like to, of course, see continue. I'm going to take a very quick break here. When we get back, we're going to drill down and take a look at some of these companies that are reporting earnings and also others that are holding up quite well. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. So I mentioned to you that earnings season is due to start next week, and it's going to be all about bank stocks. They are generally the first grouping of stocks that do report. I have a daily price chart here of JP Morgan. They are one of several banks. They are due to report on Tuesday. We can see this nice uptick. It was up 9% on Friday. A lot of bank stocks were up on Friday because of the government's small business care package that is going to provide paycheck protection loans to small businesses, and they are going to involve banks. So that was considered a boost to some of these banking stocks. And we can see, I'm talking about JP Morgan because among those bank stocks that are due to report, they do have a very high rating as far as the anticipation. They've been able to broaden out their activity beyond just bank loans. This big drop here had everything to do. Financials are having a very tough time because of the fact that thinking that there will be many loan defaults here that will be taking place. But those banks that are diversified beyond that, JP Morgan has certainly an avid, very vibrant trading desk and other activities, but you are going to want to see how the markets respond to these bank stocks, because in March, a number of analysts came out and dropped their estimates by 50%. So with that, you may see some of these bank stocks coming in above estimates. This is Goldman Sachs, GS. You can see it's been advancing quite nicely. RSI is positive, and we've had this nice MACD downtrend reversal crossover. So we are, of course, going to be paying close attention not only to those numbers, but to the market's response. And I just wanted to point out one company that came out with not good news into the close, after the close on Wednesday. That was Starbucks. They mentioned that their sales, their revenues during Q1 fell 50% because of the coronavirus. Most of that was China related, but take a look. Thursday, the stock rallied 3%. So when you see that sentiment, that ability for investors to shrug off bad news, very, very constructive. So that's what we're going to be on the lookout for next week. Citigroup is due to report on Wednesday. So again, it's going to be all about these banks. Are they able to break back above these key areas that currently are resistance, or will they find some sort of bad news as far as going forward? Another area, and certainly other companies that are due to report next week, JBHT, that's one of the larger trucking stocks, and you can see another V-shaped downtrend reversal attempt. The stock's been really getting traction. Management has been coming out, and they talked about their early March into early April, trucking stocks on average, they did see a 30% surge in demand with the lockdown as people did begin to certainly hoard provisions. So it'll be interesting to hear their outlook as far as is there an anticipation for that demand in trucking services to increase. ASML is a big semiconductor stock. We talked earlier about Intel and TSM. This one I like because it has broken back above that 50-day simple moving average. So that is quite bullish as far as activity, so we'll be keeping an eye out on that. Let's go ahead and move on, because I would be remiss without pointing out some of these stocks that are viewed as growth stocks that are really sitting here looking quite attractive. This is a healthcare stock, AMED. Amedisys, and it had an earlier advance. Now this is rather sloppy with this wide daily trading activity that we've seen here, but the stock is emerging and potentially forming the right side of a base. So very constructive action, broken back above, and this period here where it really just very slightly undercut that 200-day is very constructive. That shows relative outperformance. Only 5% of all stocks traded found support at that 200-day. So to just undercut it is a sign of strength. We are seeing this shorter term moving average golden cross that we talked about, constructive, RSI and MACD, both positive. So that, I would tell you, is a rather unusual looking chart. Another one that's a little bit smaller, PCRX, is a healthcare stock. Pharmaceutical, a little bit earlier in their potential advance. These guys are have a non-opioid pain medicine, and we can see what I'm pointing this out because it did break up above this 10-day. You could potentially, it's at 35, it could trade up to that 39. That would be a 10+% potential advance to the upside. The RSI just turned positive on that particular name. Another healthcare stock, bit larger, Bristol Myers. These guys, they did have that merger with Celgene, so it's all about getting FDA approval. They did come out last week with, they have about 5 drugs that they are looking throughout this year into next to get approval for. We can see this price just broke up above that 50-day simple moving average. RSI is positive, MACD into positive territory, so that is very interesting. One other area that we can look at as it relates to healthcare is, this is a healthcare software provider. It's VEEV, Viva Systems, and I'm pointing this out because it is a very integral part as far as helping these pharmas and biotechs make their way through the FDA clinical phases. They provide that software platform. It's a very complicated system that needs to be gone through, and these guys are the providers of that service. And we can see this V-shaped recovery. Stock is poised to break out to a new high, and that's not very common in this market. The RSI and the MACD, both constructive. One other healthcare stock that we can look at before moving on, QLYS. Let me just make sure I can get that. And this is another healthcare, I'm sorry, a software stock that is in the healthcare space, and highly unusual to see this kind of advance powering to new highs. I would put this on your watch list. We are anticipating certainly potentially some sort of pullback given last week's advance, and this would be one certainly because it is really superior as far as showing superior relative strength and leadership types of characteristics. EW is another, Edwards Lifescience, and a little bit earlier in its advance, but we do have this March 23rd low and another bottom in April. So this is a double bottom formation. Pay attention to how it behaves at this 200-day. A nice break above that would be bullish, coupled with a positive RSI and MACD. One other area, there are a number of tech stocks that are certainly doing well despite that malaise in the overall tech sector last week. This is a data storage company, Silicon Motion, SIMO, and I'm pointing these stocks out because, again, they've broken up above these potential areas of resistance, and you can go back historically and see how monumental that type of action can be. If you are not inclined to trade this market, certainly put this name on your watch list because it is exhibiting potential leadership characteristics. I think I have time for one more stock here. AUDC, Audio Codes, smaller cap. These guys teamed up with Microsoft Teams service. It provides the audio portion that allows people to stay, the workforce to stay connected despite being in lockdown, if you will. So we can see this stock is poised to break out of a nice base. I'm going to leave it at that. I hope everyone has a healthy, nice long weekend, and I will see you back here next Friday. Take care.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.